Alright, in this video we're continuing our discussion of AUC Section 300 for planning and audit. And for this particular video, we'll discuss additional considerations in initial audit engagement. So this would be if we've engaged our client to perform an audit for them for the first time. Whether they've had an audit before or not, we don't know. But if we are performing an audit for them by our firm for the first time, we would need to do a couple of different procedures, and those are discussed in other AUC sections. For instance, AUC Section 220, that's the one about quality control of the audit, has some procedures for us to do. Also, AUC Section 210, which is regarding engagement terms, and so in that we would need to communicate with the predecessor auditor to make sure that there's no issues with integrity of management, or to discuss other matters with them regarding misstatements that were noted in prior years and that sort of thing, for us to make sure that we even want to engage this client at all. So for those particular sections, you can go to these AUC sections. We have videos on those posted up. Let's go down to the explanatory material here at section A20 to see what additional information they have for us regarding initial audit engagement. Okay, so now we're down to the explanatory material about additional considerations we should make in initial audit engagements. And this basically just kind of reiterates what the other AUC sections tell us to do related to initial audit engagement. So let's just go through these really quick. So part of the difficulty of performing an initial audit engagement is that we don't have the prior experience with the client or with management, and therefore it's a little more difficult for us to plan our audit because we're not really familiar with the entity at all. And so that's why we want to do a lot of additional procedures for the initial audit engagement in order to gain kind of a better understanding of the entity, as if we have performed the audit before and that we're familiar with the client. And the way that we do that is primarily by discussing the audit with the predecessor auditor, the auditor who did the audit before us, and from which we're taking over the audit now. And so as part of our actually deciding to engage our client, we would discuss with the predecessor auditor management's integrity and the reasons that our client decided to leave that other auditor to go to us, that sort of thing, just to gauge whether we should engage the client at all. And then after we've done that and we've actually engaged the client to perform their audit, then we will go back to the predecessor auditor and ask if we can take a look at their work papers. And that's described more in detail in AUC Section 510 regarding opening balances and initial audit engagement. So you can go to that particular section to read more about what you're supposed to do in that circumstance. But that really helps us to see the procedures that the prior auditor did, and maybe we can incorporate that into this year's procedures in our audit, and also to gauge any big risks or potential areas that things could be misstated, or that prior years might have been misstated. So really useful procedure for us to do, and again, you can go to 510 and look at that in more detail. We might also go ahead and discuss with management any major issues, for instance, the application of accounting principles or auditing or reporting standards. That way we get an understanding with those sorts of governance and with management about what we need to accomplish in the audit, as well as particular risks that we have or disagreements that we can go ahead and take care of before we get going in the audit. This helps in us developing our overall audit strategy and audit plan. And again, with AUC Section 510, we need to get comfortable on opening balances. So those would be the ending balance of the prior year that the predecessor auditor audited. So we need to go back and look at the procedures that auditor performed on the opening balance sheet balances to make sure that they did the appropriate procedures, and whether we believe that those opening balances are accurate. Because whatever those opening balances are, weigh very heavily on in particular, the net income of current year. So if they didn't do the appropriate accruals, record revenue appropriately, etc., in the prior year, then it's going to affect our current year, and that will come about in the opening balance of the balance sheet. So you can look at that in more detail at AUC Section 510 as well. And finally, we might have some specific procedures at our firm level, at our system of quality control, that we need to do for initial audit engagements. And it's useful to maybe go to AUC Section 220 to see the requirements for quality control policies, and that'll direct you to QC Section 10, which gives you more specific requirements for a firm's quality control. And so they give an example here of what a firm might have as a quality control policy for an initial audit engagement, and that might be that the engagement team might involve another partner that's within the firm or outside the firm to take a look at our audit strategy prior to commencing our procedures, or review reports prior to the issuance. So this would be what's called a quality control reviewer, and that person who's outside of the engagement team would be able to review our work and make sure that we did everything that we're supposed to, and that the opinion that we've come up with is appropriate based on the evidence that we've obtained. So all very useful things for us to do in initial audit engagement as we are going through the planning process.